be reading through the question, and those of you that have got pens, you can be writing down whatever it is that I'll be reading. Once I read something, once I read the transaction, I'll also be mentioning the figure of that transaction. So if you have a pen or a pencil, you can be writing down those so that you can go through at your free time. So we're going to start with the income statement. I already explained what an income statement is. It summarizes the accounting information in a particular accounting period, which is the summary is what makes it easy for the stakeholders to understand whether the business was running at a profit or a loss. So we talked about the format of the income statement. So today now we're going to solve a problem, a question in the income statement. We've been presented with a problem, so we're going to solve it. So we'll start with the income statement and later on go to a balance sheet. So we have a trial balance, and I'll be mentioning the figures as well as I'll be reading the transaction as well as mentioning the figures. So if you have a pen or pencil, you should be writing down those, or you can go through at your free time. So income statement, we have been asked to prepare an income statement for M Mutobo for the year ended 31st of November 2010. 31st of November 2010. So, like I always say, you should start up with the title. The title is very, very important. The title on its own carries a mark, 1 or 2 marks. So it's very important. That tells you the importance of it. So in accounts, every entry that you make adds up to a mark. So even if your figures are not, even if your totals are not correct, so long where you had a number of correct entries, then marks will be given to you. So even the title, once you just write up the title, then a mark will be given to you. So we asked to prepare the income statement for M-Mutobo for the year ended the 1st of November 2010. So we're going to write up the title. So I'll read out the title income statement. It'll just be a continuation of whatever it is that I have on the phone. So we'll say M-Mutobo was income statement for the year ended let's just put December, 31st of December 2010. So it's a long time ago. Some of you are not even there. So this is the title. So we're going to now prepare the income statement. So it will be a table, simple table, which will have 3 columns. So we have the first column there, the second column there, the third column, and the final column. So like I said, here you indicate the symbols of your currency, depending on the country where you live. So on our trial balance here, we have the figure for the sales. So if you have a pen, write down this figure of the sales. The sales figure is 50,000. 50,000. So the sales figure is 50,000. So we're going to write the sales. The sales figure, which is 50,000. We had no sales returns. We have no sales returns. So meaning whatever it is that we sold, the people that we sold those goods to were satisfied with whatever it is that we sold them, there were no sales returns. So there are no sales returns. So you just go straight to the last column. So like that, we have a sales figure of 50,000. So since we have no sales returns, we go straight to the opening stock. We go straight to the opening stock. So this is what remained in the previous accounting period. This is the stock that remained in the previous accounting period, or the items remained in the previous accounting period. This one we are going to enter it in the second column. So the figure for purchases, is 29,900. 29,900. So the figure is 29,900. 29,000. Sorry, it's 11,000. I can see it properly. It's 11,300. So the opening stock is 11,300. 11,300 is the figure for the opening stock. Then we had purchases. We had purchases. So purchases. So other items were purchased. Other items were purchased the next accounting period, and that represents the purchases. So the purchases figure is 29,100. That's the figure I wanted to write on the opening stock. Thank God I realized maybe I was trying to make a terrible mistake. So the purchases figure is 29,100. 29,100 is the purchases figure. I've entered it here because there are no purchases returns here. So we were satisfied with whatever it is that we bought from the supplier. We were satisfied with whatever it is that we bought from the supplier. So we didn't return any of those items that we bought from the supplier. So hence the purchases will just go down in the second column so that it can be added to whatever it is that we entered with in the next accounting period. So we are going to add this. We are going to add this. And after adding this, for those of you with calculators, you can be solving this. I don't want to waste time calculating. I have limited time. I have other important things to do. This is not the only thing that I do. This is just a part-time thing. I have other things that I do. The ones that put food on my table. This is just the way of paying back to the society, and it adds no value to my income. So, yes, after adding this, what are we getting? Here it's showing me that we're getting something like 40,400. I don't know if that's what you are getting. If you get a figure that is different from the ones that I'm getting, be free to share, to share a thought in the comment section, or to try and put up the correct figures in the comment section. So we have, after adding this, whatever it is that we have is the cost of goods available for sale. So this is the cost of goods available for sale. So this is the total cost of the goods that we have in stock, the goods that we have that are available for sale. This is the value of the goods that we have, the cost of the goods that we have present, the ones that are available for sale. So now, after this, we now less the closing stock. We less the closing stock. So having these goods available for sale, not all of them were sold.